Number 1. Anduril Industries. Anduril Industries is widely considered to be on the path to becoming a publicly traded company. CEO Palmer Luckey confirmed on CNBC that "We are definitely going to be a publicly traded company," emphasizing that public listing is crucial for Anduril to compete for massive U.S. defense contracts, such as trillion-dollar programs like the F-35 Joint Strike Fighter. Anduril has rapidly ascended to one of the most valuable tech startups in the U.S., recently raising $2.5 billion at a valuation of over $30 billion, with investors such as Peter Thiel's Founders Fund leading the latest round. The company is building out a billion-dollar manufacturing facility in Ohio with plans to begin production in 2026, a key milestone executives have said will help prove their manufacturing and scaling capability to potential IPO investors. While Luckey stated that Anduril does not need a public offering for capital raising, he believes it's important for American investors to participate in the defense technology sector and for the company to position itself for major federal contracts. Analysts project a likely IPO timeline in 2026, provided manufacturing goals are met and market conditions are favorable, with some estimates placing the potential IPO valuation between $40 billion and $90 billion, depending on contract wins and revenue growth. Investor excitement is strong, with parallels being drawn to the IPO surge seen with Palantir, and both retail and institutional investors are watching closely. Anduril's unique blend of deep AI, defense autonomy, and significant government partnerships could make its stock highly sought after, especially if the company continues its rapid revenue growth, which doubled to $1 billion last year and is projected to double again by 2026. With robust margins, a large government contract pipeline, and high-profile backing, many expect Anduril shares to be among the most profitable defense technology IPOs in recent history, potentially setting a new standard in the market for innovative defense startups. Number 2. Rebellion Defense. Rebellion Defense has firmly established itself as a pioneer in artificial intelligence for cyber defense and battlefield awareness, securing a growing foothold with key branches of the U.S. military. The company has rapidly expanded its Department of Defense contracts, including a notable extension for its Nova threat detection platform with the U.S. Navy, reflecting steady revenue growth and strengthening ties with government clients. Publicly accessible, pre-IPO platforms indicate increasing liquidity for early investors, a classic sign that Rebellion Defense may be preparing for a public listing as demand grows for its shares in private secondary markets. Although the company has not officially filed for an IPO, investor interest remains potent with high-profile venture backing from firms like Kleiner Perkins, Insight Partners, and early support from Eric Schmidt. Rebellion Defense's annual contract value reportedly jumped by 50% in the last year, and the company has taken steps to ensure long-term sustainability, suggesting robust fundamentals and scalable product-market fit for the government sector. Industry speculation positions Rebellion Defense as a prime candidate for a near-term IPO, particularly as defense technology and AI remain hot sectors for growth capital. If public, the company's stock could draw considerable attention from both institutional and retail investors eager to gain exposure to the defense AI market, with expectations of profitability bolstered by continued government spending and strong revenue momentum. Number 3. Epirus. Epirus specializes in advanced directed energy weapons, particularly high-power microwave systems designed to defeat drone and electronic threats. The company has recently secured substantial government contracts, such as a $43.5 million award from the U.S. Army for its latest generation anti-drone systems, building on previous deals like a $66 million contract to supply its flagship Leonidas platform. In early 2025, Epirus closed an oversubscribed $250 million Series D round, bringing its total funding to over $550 million, backed by major investors including 8VC and a strategic investment from General Dynamics Land Systems. Buoyed by these developments, Epirus is rapidly scaling operations, expanding its workforce, bolstering its supply chain, and opening new training and simulation facilities in Oklahoma to meet surging defense and commercial demand. Industry analysts consistently rank Epirus as one of the most closely watched private defense startups in the sector, naming it a top IPO candidate, especially as militaries worldwide increase anti-drone spending and demand for rapid innovation in electronic warfare grows. While Epirus has not officially filed for an IPO as of mid-2025, its significant traction, repeat contracts with the U.S. military, and expanding market reach have led to heightened investor interest, including increased activity on pre-IPO secondary markets. If and when Epirus goes public, its stock is poised to attract strong attention from both institutional and retail investors, given its central role in the emerging market for counter-drone and directed energy solutions. With rapid revenue growth, robust government pipelines, and strategic backing from defense giants, analysts anticipate Epirus could offer one of the most profitable IPOs among defense technology firms if market conditions remain favorable at the time of its listing. Number 4. Shield AI. Shield AI, based in San Diego, is recognized as a leading developer of AI-powered autonomous aircraft and drones, and has established a strong presence through repeated, large Pentagon contracts. The company has raised more than $500 million in venture capital, which underscores robust investor confidence in its technology and long-term prospects. In 2025, Shield AI announced a strategic partnership with RTX Raytheon Technologies, integrating its flagship AI autonomy stack, HiveMind, and its VIDAR sensor payload into RTX's defense platforms. This collaboration positions Shield AI products at the forefront of next-generation, AI-driven military applications, especially as all domains of warfare prioritize rapid, software-driven upgrades. To prepare for public markets, Shield AI has consistently recruited executives with experience in publicly traded firms, a move widely interpreted as groundwork for an eventual initial public offering. Multiple defense industry news sources regularly cite Shield AI as a top candidate to go public in 2025 or 2026, with continued large-scale Pentagon engagements expected to support strong revenue growth and visibility. The company's close government ties, repeat contracts, and rapid product integration into defense supply chains strongly signal readiness for IPO. As demand for autonomous systems and AI-enabled drones accelerates, amid broader Pentagon and congressional pushes to fast-track AI adoption in defense operations, analysts and industry watchers expect Shield AI's IPO to be among the most anticipated in the defense tech sector. If current trends in venture backing, contract wins, and product deployments continue, Shield AI's public stock is viewed as likely to attract significant interest from investors seeking exposure to the explosive growth in defense autonomy. With its impressive pace, strong margins, and unique technology differentiation, Shield AI is frequently listed as a prospective top performer and highly profitable offering when it goes public. Number 5. Databricks. Databricks is a fast-growing technology company at the forefront of artificial intelligence and data analytics, boasting an impressive 60% revenue growth year over year and achieving more than 140% net revenue retention in fiscal 2024. Recently, the company raised $10 billion in private funding at a $62 billion valuation, reinforcing strong investor confidence and providing significant capital for expansion and innovation. This funding round, completed in late 2024, came alongside strategic acquisitions like Mosaic ML, which enhanced Databricks' AI and data platform capabilities. CEO Ali Ghodsi has confirmed multiple times that going public is inevitable, stating in early 2025 that the IPO is not a question of if, but of when. Although Databricks has not yet filed for an IPO as of mid-2025, he indicated the earliest theoretical timing for an IPO could be sometime in 2025, with 2026 also a strong possibility depending on market conditions. The company deliberately chose to raise private capital instead of going public in 2024, citing uncertain market conditions and an election year as reasons to delay. The extra capital also provides liquidity for employees and investors ahead of the IPO. These companies are likely to attract strong investor attention due to their rapid growth and strategic market positions in technology and other high-revenue sectors. That finishes our list. Each of these companies is widely regarded by financial media and industry insiders as not just a future unicorn, but one you may be able to buy on the stock market soon. For more details and updates, make sure to subscribe. Remember, early IPO investing is risky.